This is Jamie with BarI. In this video, we're going to show you specific things and errors to look for when completing your variance report. We're going to focus first of all on things to look for, then how to find errors, and then specific types of errors. So where we are in the process here, when you have completed your count, uploaded your invoices, provided the sales report, your BarI account manager will take a first look at results, and they will provide a list via email like this here of the items which you need to double check. In some cases they might have notes, in most cases you'll simply get a list of the items. So let's take a look now at how we would interpret this and how we can check for these items. So first of all, type of things we want to look for. Most importantly, we suggest not guessing. So if you're not sure, it's absolutely fine to say, I don't know, and we'll leave the number or make appropriate adjustments, but don't guess, that's worse than anything. A second broad thing to look at is try and understand if the product is missing an amount or is over an amount. Let's explain about this. So in the case here, we're looking at Stella, and this is a missing quantity. So whenever a product is missing, you'll see that accountability will be below 100%, and you'll see that the number of servings that have been sold will be less than the amount that was poured, indicating obviously we poured more than we sold, and therefore we have missing product. The flip side of that is when we're over or we have too much product. So in the case of the Quervo Gold here, we can see accountability is comfortably over 100% because we have more servings were sold than was actually poured in real life. In general, this is a good order to go through our checks. So the first thing is to check the current count. It's always really important to check the current count to find the errors in this cycle, but also because an audit cycle has a previous count and a current count. And obviously today's current count will become the next cycle's previous count, meaning that any errors on your current count will impact not just this cycle, but the next cycle. So there's sort of a double benefit to finding counting errors. So if you need to check out your, you suspect a counting error, search for the item by name and look it up, and then click on review, where you'll come then to the detailed product viewer, which will break down all the information we're using to compile the numbers. And if you look under the subcategory here of product count, you can see all the occasions in the counting map where the item was counted, the microzone name, what was counted, and then the total product count. So that's how to check your counts. Next thing to look for is whether the recipes are correct. So in this case, we have a product Sky Vodka, and we think we're missing a little bit. We want to check out the recipes. So if you'd like to check out the recipes, again, look for the product by name, click on review, and again, from the detailed product viewer, in this case, we want to scroll all the way down to the bottom and look under this product sales subcategory, and you'll see a full list of all of the buttons here that include the product, how many times they were sold, the average dollars taken. So for instance, Long Island is $7 per drink, what the recipe setting is. And so the quantity sold to the recipe setting will tell you the ounces that were sold. And this is then aggregated according to product units and aggregated for the whole section. So this case, you can understand how they sold 24-liter bottles of Sky Vodka. Another thing to check for is that we're not missing recipes. So if you're missing product, one of the reasons could be is we don't have a point of sale button that uses this particular ingredient in the system. So check the list of buttons that are included, and if there is a button that uses the product which is not listed, that's a sure sign that we need to update your recipes. Next type of thing to look out for is missing invoices. So here in the case of Melvin Killer Bees, we have a negative accountability. That's obviously a sure sign of an error. In this case, we've got a negative poured. So we can see that what the reason we get this negative poured or a missing invoice in this case is the cause is because previously they'd zero, they had none invoiced, and yet they've counted, in this case, 0.6 kegs. So we jokingly call this the Jesus pour because obviously it's not possible to turn water into wine or water into beer in this case. So you cannot product cannot magically appear. If you're seeing a minus poured, you know that something is wrong and it could well be a missing invoice. And then two types of flip-flops. The first type of flip-flop is a flip-flop between cycles. So in some cases, if we have a miscount that wasn't caught, you can see a flip-flop between cycles, meaning that you can see today we're 14 servings over. We sold 4, but supposedly we poured -10, which is obviously not possible. But what is interesting here is that last week we were missing 13 bottles or 0.54 cases, and now we are almost exactly the same amount but in the different direction. So we're missing 13 last time, and now we're over 14. So that is a flip-flop between cycles that indicates a previous miscount. The other type of flip-flop here is a flip-flop between two products within the same cycle. So these are both in the same date. And you can see here that one of these wines is over by 50 servings or 12 bottles, whereas the other one is missing 12 bottles, the exact opposite amount. Obviously indicates that we've confused these two similar products. And as you can see here, it's unlikely they could have poured that much, but it's fairly unlikely. Of course, again, we've got this negative poured amount. They can't go from 8 to 20 without having any invoice, so obviously some type of error going on there. So those are the flip-flops. Now we're going to move on to specific error types, starting with the most sort of obvious one, and this is sort of going over the same thing again. So looking here at Goldschlager, this is a case again where we've got a type of error which is negative poured. We've talked about this already, but you can see here that previously they had 3.1 bottles and then none were delivered. So again, it's not possible to have 3.9. So with certainty, we know that this number must be incorrect and we're going to make some sort of adjustment. It's awesome if you could figure out and say, yep, we only have actually 3 bottles of this or 3.1 bottles of this. So that's a negative poured error. The second type of error is no point of sale rings. So in the case here of Sturley Blueberry, we can see we have a plausible and sensible amount that was poured during a week cycle of 16.9, but none were sold. It's unlikely that the bartenders poured 17 almost whole shots without selling any, so it indicates there's probably some type of miscount. And in this case, we can see previously they had 0.8 bottles, and now they've got 0. So the fact that there are none poured, but a decent amount used indicates probably a miscount or a missing point of sale button. So that's no point of sales ring error. Then the third type of error is more rung than poured. So in the case of Maker's Mark, we can see here that we have unaccountability over 100%. We've got missing is a minus amount. And it's interesting to see here, this is a pattern. So that there was missing or negative missing amount this week. And the same, we had 32 shots too many last week as well. So what that probably indicates is that we're substituting one product for another if there's not some type of miscount. The fact that I said that we're getting the same type of error 2 weeks in a row indicates probably some type of systematic error. In this case, it's good to look and see if we're substituting one product instead of the Maker's Mark. These buttons here obviously contain makers, they're called makers, but this signature drink, Luxardo Old Fashioned, what we uncovered potentially in this case is instead of using the makers that the recipe calls for, they've now changed that recipe or they're using something else in its place, which would cause that product to be overrung, where more rung than poured. And then finally, the most common type of error is when a product is missing. It's typical for a little bit of product to be missing, but we can see in the case here of Corbel Brandy, we've actually accounted for less than 50% of what was poured. It's fairly unusual to have, less than half of the product accounted for, and it normally means there's some type of error. If there's not an obvious miscount, then it's normally because we're missing something in our calculations or recipes. In this case, we discovered that the bar is using this product in sangria, so they're pre-batching it and using large quantities when they make up a batch. And so again, if you've got accountability that's below 70%, often it's the case that we could be missing recipes, and so that is simply a missing error. Hope you find that helpful. As always, thanks so much for being a Bar I client. And if there are other videos that would be helpful, please shoot us an email. We'll be happy to throw some up on YouTube. Thanks again.